Hey, good morning, Daniel. Let's see. So I did post, was it back in October, a 52-week results for ES. The one contract was like a little over $6,000 profit um, at the end of this year. But then I'll just do more of like a recap on that as far as just a 2025. So that way we just get more of a fiscal year and stuff. So you'll have both of those. So I believe I made just a specific video on like the results. So if you just look at the normal video uploads versus the live, you'll probably see that one. Um, I think in that I covered NQ too. So NQ would be 30 minutes after this session ends. And it's just like, again, trading for a 30-minute block. And it was around the same. I mean, we're going for 200 points versus 100, so like 12,000, kind of around there. So it's really the same, if you're going for, the same dollar amount, but not the same contracts. Both had a relatively same win rate. Both, I think, yeah, like the average max loss is like 3 times. I think they're both like 85% or 88% win rate, something around there. Let's see. So it's been a while. So this other left side chart, this is more using the unit Renko versus time based. And so how you see I keep clicking the chart trader on and off, seeing the profit wave going in the direction that we want without a wick on the end of the candle on the opposite side. And the background color change. So it's kind of like that, similar to a setup that Justin was using, when he's just trading in Q, just going for like 5 points on the 2-minute chart. I think he called it maybe like the A plus setup. It's kind of similar to that, but he's using still a time-based chart, and this is price-based. The Unit Renko is in the NinjaTrader ecosystem. It's free. Let's see if I can catch it. So like this one, no wick yet. Profit wave in our favor. It's the first opportunity. Oh, there got us in. So we got in, yeah, one tick in our favor. Let's see. So let's move this up at least 2 ticks. 31.25, 31. Let's do 31.75. So this is a capped max loss. And so that 27 ticks is based on me getting the worst fill 2 ticks beyond close, and then of what it takes to close in the opposite direction. So in a sense, it's like 6 points. So from 38.25, so it'd be 32.25. Let's see, so actually I can move this up to 32. If it will go. That just looks like it's gonna hit it anyway. Let's see. There we go. So then at 32.25, it moves past. Then this, in a sense, like if this bar just closes down. Sometimes it's on the opposite side of the profit wave, so it meets even that criteria, and sometimes, no, it doesn't. So this is just for fun. I have no idea how this is going to work out. I mean, as you can see, like just going price based, super choppy looking. Even this just looks chopped. And then, I mean, this one's pretty simple to trade, but it can move fast. And like higher volatility environments for the bigs, probably like 30 or above, it's just gonna move too fast. I mean, sometimes we've already missed trades. Kind of like one of the only rules is that if this bar closes up, and if I got a horrible fill and it didn't close out for the win and started going against us, I would just hit like the break even. And sometimes that happens. That did happen earlier this week. See, there you go, boom. So it happened pretty much. That closed at 32.25, but it has to push to 32 in order for that to actually close. If it just touches to 32.25 and moves back, I mean, it won't close. Like you won't see the white dot yet. Just like, let's see, I think there was one, but so for people who really just want to like a fixed stop that you kind of almost never move dramatically, this kind of what this would be for. Yeah, this we had set it like 5 times as a max loss, and that's just to protect us. So like if it pulls down, gets us, but lets us hang in the trade longer than this one would. And this one, I have the bar close, only green, only red, so it doesn't, like if it goes in the wrong direction super quick, it won't get us in the trade. Still the -2 offset. This one, since this is time based and I just wait for the countdown, I just keep it gray. That way the logic and the programming, it doesn't have to look at that if it closes in the right direction. And I'm really just more actively managing my entry. And that is like the kind of a downside pitfall of this one is that you can go chop, 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 and then you get the one bar that you need, and then it's just going to continue what it was doing. It's price-based, not time-based. So, this one has the chop filter built into it, and it's time-based, so it's just gonna behave differently. So I did stop, like I'm not tracking RTY, YM. I did give kind of like, I mean, YM is not, it just doesn't work with this. It just ended up being too choppy, consistently choppy. RTY, it has it has a high win rate, um, but the commissions are gonna kind of eat away at you a little bit because you're only going for one contract. Like you'd only go for $70 instead of at least 100, but you're paying the same commission. In Q, you're going for 200, so you have to do like three RTY contracts, and so you're paying what, like $15 in commissions and fees round trip versus like five. So so the 15 or so 65 times three, so it just gets you. No, we're still using chop filter on. So I like to keep it clean. That's what the statistics were based on, so I just stick with it. I mean, you just get less trades, but better quality trades. But I think the chop filter off, it's really just kind of like the triple G, triple R, like. And so both of these are just kind of trying to be about as objective as you can get with trading. This required 26, 25. And like right here, conditions are met. If this closes down, then the red background will hold. And this needs like what, 31.25 to show a wick. 30.25. Like that. Boom. Takes that of it. Disqualified. Yeah, it's like, whatever additional filters. I mean, you could track multiple ways of like the same thing. So yes, chop filter on, chop filter off, with the 200 MA, without it, with the 100, without it. Like you can do so many things. And if you build like probably a 52-week, 1 year data set on all of them, you just kind of see if which ones seem viable and which ones don't. And then it's also about ones that have a good win rate. Maybe if you notice your max losses are more manageable or more comfortable on one versus the other that is profitable. So there's other factors versus like, oh, just get like a really high win rate. I mean, yeah, you can have a 95% win rate, but what if you're always taking those 5x losses? Then you're really dependent on having to win 95% of the time. You're going to be right that often, or is this going to be right that often? So just finding the balance of what works for you that is consistently profitable. Like ideally, if you think of it quarterly, like every 3 months, where you're not like losing money, hopefully over a 3-month period. Because I mean, you're never going to win every month. I don't think that exists. Any strategy, no matter how great someone's algorithm is, programming, any of that stuff. Like, I just don't think that's achievable, but it's okay. Like, think of it quarterly, definitely, 6 months, yearly. I mean, if you go 6 months without making any money and you're day trading, it's not investing, where you can just buy and hold. So we need 24.25 would be the close price of this one. Like our 2 minutes, let's see if that changes.
Order canceled.
I move past that 2 ticks. and then it closed to where, you know, we went profit. We were like, again, there's no retracement here. We're not doing that. We missed it. We did what we could. All right, let's see if this is a tricky one. It's like just barely riding right there. Okay, yeah, go up, go up. There we go. That way it's not even a thing. So this is one, you know, like I'll log this one and the data set say it was too fast. So I can't count it as a win. Yeah, just do your testing of different ways. Again, everybody trades a little bit differently, at least, you know, what you're comfortable with. So if you want to go for bigger targets, you know, like, I mean, especially if you can go with the 1-to-1, you know, then, you know, you're ideally looking at like a 60% win rate, 60 to 65 um, on that one. And so, I mean, no matter what the win rate is, one of the things to consider is what a losing streak would look like. So there's a video called like the math of trading. I forget who actually did it, but it's on YouTube. If you just look at like the math of trading, and it'll talk about, like, he actually gives charts, and you can actually get he has them set up to where you can like a Google Drive or a Google Excel sheet, and you can input whatever figures you want in there. But other than that, he just kind of goes over like, oh, okay, you know, if you're going for you know, like 2 times your stop, I mean, you're probably only going to win 40% of the time, maybe 50%, you know, sometimes, you know, so like how many times you would lose in a row, you know, what is realistic, like out of 100 trades, 1,000 trades, like all these things of what the, you know, statistically should be. However, what you have to, you know, think of is that the market has no idea if you've placed 100 or 1,000 trades yet, like of whenever you start trading. So you could, on your first 10 trades, you can just lose in a row, even though like it may only take you like 200 trades statistically, like that should happen to you once out of every 200. But it doesn't know that you didn't trade the previous 190-day, you know, trades. So it's just whenever you started. Um, and then also it just kind of like it's, you know, it just like resets, so that can happen multiple times in that 200 trades. You know, if you just kind of do like, there's websites that have like a coin flip, and you'll see the statistics of like how many times you actually lose in a row on a 50-50 chance, 50% win rate. So you have to be able to stomach those losses of, you know, if of like you're going to lose a lot potentially, you know, because you're going for more, and then you have to your trade size. So that it's also figuring that out, is like what should your trade size be, you know, for the amount of capital you have working with. And you know, if you have a really high win rate, statistically you're not going to lose as much in a row. So you could potentially, you know, have a larger trade size, but maybe not. If you're going for a 1-to-1, I mean, statistically, man, I mean, you could probably easily lose like even anywhere between six plus trades sometimes. Let's see. Yeah, I just took a screenshot of it. Okay, yeah. So if you win 50% of the time out of 1,000 trade sample size, or it's just anything, gambling, kind of whatever, 10. You can lose 10 in a row. So let's just say if this has simple market metrics, the, 2-minute ES, 85% win rate, let's just say that, 80, 85, that's still 4 trades in a row you're going to lose. And again, that can happen anytime. You can do 4, you can win 4. There's another 4, win 4. And of course it can go beyond that. This isn't perfect. On it. Let's see if there is anything. Win rate drawdown. Kind of even similar to this other win rate drawdown. Okay, this gives percentages of, so just say at an 85% win rate, you have a 100% chance of losing 1, 89% chance of losing 2 in a row, 28% chance of losing 3, 5% chance of losing 4, 1% chance of losing 5. It says 0% for 6 or more trades, and this is out of a 100 trade sequence. So it's kind of another way of looking at it. Let's see. If I click. Oh. Okay, this one happened after. Anyways, I'm done. So that's the percentage out of 100 trades and stuff of the odds of it happening within 100 trades. Let's see. You're saying you're, over 55%. So yeah, it says losing 4 in a row. You have a 98% chance of losing 4 in a row, 83% chance of losing 5, 55% chance of losing 6, 30% chance of losing 7, 14% chance of 8, 7% chance of 9, and even 3% chance of 10. So it doesn't mean it'll happen, it's just the odds of it happening. So that one was Win Rate and Drawdown Cheat Sheet by Steve Burns that gave the percentages. And then that Losing Streak Calculator, the art of, or the math of trading. I think it's maybe the art of trading is the channel. So it's just all things to consider. So, yeah, you should probably be a higher win rate for, if you're going for 1-to-1 to really be profitable enough and then to withdraw the draw, to take the drawdowns. I would say that, man, you probably need to you're risking 1.5 or let's see, no, you're winning 1.5 and you're risking 1 for that win rate. Because if a 2-to-1, if you're risking 1 to make 2, that's a 40 to 50% win rate is what that should be to be consistently profitable. You need over a 60, preferably 66, kind of a 65% chance, 66, out of every 3 trades you win 2 and you lose 1, statistically. That's what a 1-to-1, and I believe that was the micro day trading channel on YouTube. So micro day trading is something like that. He goes over that because I think he does 1-to-1, and he just suggests out of every 3 trades you should win 2, out of every 100,000 trades or whatever it is. So yeah, the YouTube channel, Art of Trading, I believe is the channel. And if you just type in, see. If it brings it up. Yeah, there you go. The math of winning and trading. The art of trading. There you go. That's actually a great video. It's probably one of the best videos to watch for trading. Just to, again, it helps you manage your expectations on it. So like, I mean, to know like based upon your temperament as a trader, what you want to risk, what like kind of what you base your profitability on. Because of course, I mean, yeah, it sounds great. I'm risking one to make two. Are these huge profit targets? But another thing, it can't really. It makes it hard is if you have like trailing stops and these other variables, like and subjectivity. How much subjectivity do you have in your trading? Then it makes it really hard to like lock in and identify like what your winning percentage actually is. And are you going to trade the same way this year as you did, next year? With like that's what the whole purpose of me trying to do this is to really like take if my decision making changes. So yeah, I mean that's like say with simple market metrics or other stuff where it's like you're risking one or you're risking two to make one. And again, if it if the win rate if it substantially improves, both may be profitable with what you're doing. So it just all depends. Do you want to win more? Do you not? Do you not care? So I mean, again, it's like you kind of think of it as how much of a losing streak, how much of a drawdown can you stomach? Like day in, day out. Another thing is it's easy when we just kind of back test or just kind of track results for a while and oh, here they are. But then you start doing it day in, day out, day in, day out, and really living it, you know, um, it's just not easy. Like, okay, what? So after collecting enough of a data set, I've been trading simple market metrics, this ES two, 2 minute chart, 30-minute session. Well, I've been doing that for a few months now, and I'm kind of at a break even over the last few months, even though the prior it was gangbusters for like, how many ever months beforehand and stuff. Mostly it was, there was like a couple very small losing months, um, and then mostly like, like a good month, kind of, months where they were winning. So you're averaging like at least like $500 or $600 a month, even though I mean, that's just, what the math would be on the average, but that's, some months, I mean, you're winning 1,000, 1,400, 100, losing 100, like, so it was all over the place on that of what the real numbers were. Um, so you just, again, you have to just go through the periods and hey, is this going to be profitable, continue to be profitable long term? You know, is my drawdowns, so another thing is like, is my drawdowns not going to be that large? So you're just breaking, kind of break even for a while if you're down 500, up 500, down 500, up 500, so if you have a quarter like that, but then you go like a great quarter next quarter and just keep going. So really it's just, okay, this next year, again, is it going to be profitable? So this is when I'm really trading it. Like there's nothing, this is just for fun. It's a demo. I mean, this is the real deal as far as what statistics I have. So, this is the one that you're gonna, I'm just gonna trade again all 2026, unless if it just goes completely south and blowing up accounts and it's like, all right, is it back to the drawing board or what? Like, what is it? So, we'll see in 2026 how this holds up. So 140 points is what you got. Yeah, so again, both of those are profitable, but the 140 points, it's less, and um, your commissions and stuff. So, let's say if you had the same commission cost but less points. So they both seem profitable. It just, but that that win rate on that 71% and stuff. Definitely lower. So, all right. Well, I gotta get going, and so I'm not doing the daily uploads. I'm just doing the live and can chat with you guys if you guys hop in, and that's it. And then I'll do the results at the end of the year. So thanks for watching. It's time to close it out.